Hello, everyone. This is Jason Hatley at Five Plan Partners. I'm the financial planning manager here. Just wanted to spend some time today to talk about the second round of stimulus payments that have been generated by the Coronavirus Response and Relief Supplemental Appropriations Act that was passed just before Christmas of last year. And also revisit the first round of stimulus payments that came out back earlier in 2020. As you may remember, the first round of payments that came out in April, May timeframe were subject to an AGI limit for taxpayers who earned less than $75,000 as a single taxpayer or $150,000 or less as a married couple. You were entitled to $1,200 per person or $2,400 per married couple as a stimulus payment back then, as well as $500 per qualifying child. The second round of stimulus payments that are coming out now will be in the amount of $600 for an individual single taxpayer or $1,200 for a married couple, as well as up to $600 per qualifying child. If you qualify for these stimulus payments and you have provided the IRS with your bank account information in the past, you've probably already seen these amounts deposited into your account. If not, you'll probably receive either a paper check or perhaps a prepaid debit card sometime during the month of January. The specific point that I want to touch on about these payments is the tax treatment for 2020. As we met with several clients towards the end of the year to discuss tax planning, several of them brought up the question about how these payments would be treated from a tax standpoint. And so I wanted to spend just a few minutes talking about that. First thing I want to say is that these payments are not considered taxable income. So if you qualify for and receive these payments, you will not be taxed on them when you file your taxes for 2020. These payments are in the form of an advance refundable tax credit. Normally, when you qualify for a tax credit, you claim that on your tax return and therefore receive it at the time that you file your taxes. In an advance tax credit situation, you receive the economic benefit of that credit in some form or fashion in advance of filing your taxes. So in this case, the government has sent out these checks in advance, first in April, May timeframe of 2020, and now the second round currently. And so we're receiving that benefit of the credit in advance of filing our tax returns. The second qualifier on these tax credits is that they are refundable. There are generally two types of tax credits, refundable credits and non-refundable credits. So a non-refundable credit means that you receive the benefit of that credit up to the amount of taxes you owe for that year. And so they cannot create a refund of your taxes. In other words, a non-refundable tax credit can take your tax liability down to zero, but cannot generate a refund of taxes. On the other hand, a refundable tax credit, in that case, you receive the full benefit of the credit regardless of whether or not it creates a refund of your taxes for the year. So in the case of these stimulus payments for 2020, if you have qualified and received these payments, they are refundable credits that you will not have to pay back that were paid in advance. There are a couple of tax situations that could arise out of these payments and how they were distributed. If you remember, we talked a little bit before about how your qualification for these benefits was based on your level of earnings, and that is based on your AGI as you reported it on your tax return. Now, ultimately, your qualification for these benefits in 2020 will be based on the AGI that you will report on your 2020 tax return. Because these were advance payments and obviously no one had filed 2020 taxes at the point that they went out, your qualification was based on the AGI that you had reported for either your 2018 or 2019 tax return. If you had not already filed 2019 return, When the first round of payments came out back in April or May timeframe, they went off of your 2018 return. If you had already filed 2019, they went off those numbers. So what happens if your 2020 AGI that these payments are ultimately based on changed substantially from your prior year AGI figures that they preliminarily based your qualification for these payments on? So in one case, you could have qualified for the payments based on prior year AGI, and your income increased substantially during 2020 to the point that you no longer qualify for the payments. Well, in that case, the IRS has said that you will not be required to repay the amounts that you received. You get to keep those as a refundable tax credit, even though you do not ultimately qualify based on your current year numbers. On the other hand, if your income in prior years was so high that you were not determined to qualify, but your income in 2020 was substantially reduced to the point that you do qualify, you will have the opportunity to claim the credit that you did not receive in advance on your 2020 tax return. If that is the case, you will be able to claim the credit for both rounds of stimulus payment when you file your taxes for 2020. There are a lot of moving parts to this, and we want to make sure that you receive the full extent of the credits that you qualify for. So if you have any questions about your particular situation, feel free to give us a call here at the office or reach out to your CPA to get further clarity. We hope you have a happy new year, and we look forward to talking with you soon.